All right, guys, what is up, Chalet? Trying a little something new here. Still working on my stream setup, but I figured I would just take this morning, test out kind of what I have going on here. I'm going to run through a slide deck that I'm going to go over in the live stream today with Global Flows here first to kind of talk through it. And then I'm going to go into charts and we'll break down what's happening in the markets here on, was it, Tuesday? And it seems like things are already off to a rip. So first thing I'll do here is I'm going to go through this, what I deem the iron triangle in trading. Okay, because there's this thing I heard in a podcast a couple days ago that was really interesting to me. There's this idea that like in engineering or on the blockchain or in chip manufacturing or whatever, there's always this trilemma, and you have to kind of pick two of the quarters of the triangle. You can't ever have all three. So we're going to dive into that and why it relates to trading and why it relates to you, and go from there. So every game has the same law. It's like kind of a law of physics, right? So with chip manufacturing, they could decide, NVIDIA, AMD, all these guys, they could decide between speed of the chip, the heat and the size and the die of the chip, and the power of the chip. So if they go for more power, more speed, it could basically melt. If they go for speed and controlling the heat, they won't have as much power, vice versa. If you're building a bridge or a car or whatever, it's very hard to get good and cheap, but to have it be fast, or if you want it to be fast and cheap to build, it's not going to be that good, right? Or if you want it to be really good and really fast, you're going to be paying a lot more to have that happen. Blockchain, we've probably all heard of the trilemma that Bitcoin and other chains try to solve. You could either have decentralization, security, or how scalable the network is with like transactions per second and stuff like that. Of course, Bitcoin, one of the things that goes against it is it's not really scalable, right? That's why a lot of people think it can't really be a transaction layer, but it is the most decentralized and the most secure. You have something the opposite like Solana or something like that. It's very scalable and very secure. Well, arguably, but not as decentralized, right? So when it comes to trading, I look at it as you have these three kind of options. You have edge, which is like how much advantage per trade, how like high of a win rate or high of an expectancy or outcome is this, and how far do those odds tilt in your favor for a specific trade. Then you have frequency, how many trades you take and how often, number of shots you take. And then you have risk capacity. How much, are you willing to take in your drawdown, or are you trying to limit your downside and kind of crush volatility? Now, if you look at here, you're going to realize that whenever you move towards one or the other, is going to diminish the percentage or availability of that third option, right? So you got to kind of pick and choose where you're going to be going. The lie that you're all sold is that with enough skill, you could have all three. Super sharp edge that trades all day, and it's really not risky at all. It does feel true. It feels like there's some people out there in the world who have figured that out, but it's a very expensive belief. And if it's something you try to accomplish, it's going to be very difficult for you to do that. So every pair starves the third option, right? So edge and frequency, you trade your best setups constantly, and then your risk capacity is going to collapse, right? If you stay active and safe, well, then the edge, if your frequency and your risk capacity are high, then your edge that you're going to find in each trade probably pretty small. You're not going to be able to find the banger home run trades all the time and take all the risk, right? If you go edge and risk capacity, you keep the sharp edge, right? You keep the downside limited, but your frequency is going to have to fall off the map, right? Where you're going to find these large asymmetric bets. So you're going to have to pick two and not let the market catch you with trying to do all three, because here you go. You push all three and that system will overload, right? You've felt it before, most likely. You're over trading. Is the size that you're using that was way too big for your conviction, right? And the drawdown that come out of that, it could be substantial and can ruin people, right? But this is just the law that we're talking about here. And most people in other industries have stopped fighting it, yet people in trading still try to. So you got to pick up a corner, right? Stop fighting it, pick two to protect, and let that third one go purposefully, right? And that could be part of your archetype, part of your style. So what are our options here? Well, we have the sniper, right? Which they're going to give up the frequency, right? You have the machine, they're going to give up the edge, more frequency. Then you have the gambler, it's going to give up the risk capacity side and have more potential downside, all right? Sniper, here you go. Edge and risk capacity. What are we giving up? Frequency. None of that. So you're going to be waiting weeks for that one shot, high conviction, huge size, and you don't need to bleed out during those trades, right? Few bullets and each one is earned. This is kind of how I personally operate a little bit more these days. I used to be more of a machine, which we'll get to, but these days I lean towards finding more edge, taking more risk, and kind of giving up the frequency, right? The machine is going to be somebody who finds way more frequency and they want to kind of control their downside. But you're giving up huge edge, right? If you're taking 100 trades a day, there's not much downside, but there's not much upside. Well, then you're kind of giving up huge edge and asymmetry. That's okay. If you run 1 million of these trades, you could probably become very successful in what you're doing, especially if you have something that works pretty well. The gambler, somebody that is giving up the downside, right? They're going to be pressing every edge that they see, and they're going to be taking big bets all the time. And being that they're taking them so often and kind of trying to express their risk, they could potentially be the ones that blow up the easiest out of all. So try to think about that. Pick your two. Who are you going to be moving forward? You're not often losing because you lack a certain skill or personality type or trading style, but it's because you're trying too much to hold on to all three of those corners when you could just let one go and flourish the other way. So thought that was a pretty cool deck. And we'll switch over to markets here and see what's going on. All right, so guys, ES, NQ, and the Russell all up big today. It does seem like we're coming down to the end, down to the wire on this Middle Eastern conflict. They gotta cross the T's and dot the I's, but it does seem as if we are going to get past this thing. And I think the markets are now at this point just looking right through it. I mean, the biggest telltale sign is oil is starting to kind of fall off the map, right? I think there's another big leg lower too if we actually do. And then we'll probably see oil bounce significantly after this is all said and done and make everybody question whether or not there's actually an issue. But I think that'll resolve. So my best guess here is going to be something like this over time. I'll leave that there for a little bit and see if we can come back to it down the road. But guys, NASDAQ is at 30,000. I mean, look at this fractal. We've had this up here on my chart forever. We even had this little dip here. And it just looks like something that leading up into the big IPOs coming up, into the midterms, as Trump needs to kind of turn everything around here and have a really good few months with war stepping in and interest rates needing to be kind of tapered off and under control. Don't want to be losing the long end. We don't want these, which I figured after this. Let's check these real quick. So, we had the long end kind of starting to head up towards the top end of this range. And I think that'll continue to stay kind of range bound, but I just don't think they want to see rates doing this as Wursch comes in, right? Especially on the long end. And, you could see that, you could see Wursch coming in here and kind of capping the top of this, which I assume, we'll start to head kind of back down here. We shall see. High yield credit still looks good. Things are not falling apart. The dollar is still well within our range, which we've talked about for a long time. Gold and silver hanging around. I'm long silver, but I'm not loving it. I want to see a reaction off here to the upside, or else I do think we might break lower here before an eventual turn up later in the year. So I'm keeping a close eye on that. I don't love the reaction here so far. I need to see this break to the upside. I don't even think this is going to be a huge move up, but I do think there's some upside potential in it. Kind of we're buying around these bottom areas around here with this confluence. We'll see what happens. A lot of people have been watching copper too. It's another one you want to keep an eye on. Set some price alerts. Cattle's been falling off all-time highs for our boys trading cattle recently. So I'm not as interested in that anymore. But I'll be watching it, of course. You know, stocks are doing well, honestly. Stocks still look good to me. Nvidia I like. Amazon I like. Meta looks fine. Probably need to see that get a little higher. Apple looks really good. I mean, look at this. Look at this in Apple. Google looks good. Oracle looking good. IGV, the one that everybody thought was dead, it's up 30% now. And we're having some big moves. Like Micron is up 18% today after Trump was there rallying and talking about it's a big company. I mean, this is a special move here. That's crazy, man. Qualcomm, something we've been talking about a lot. If this breaks out of this range, I think it could have a delirious move to the upside. So it's something I'm watching. Obviously still positioned in that. I took about 20 to 30% of this trade off and I'm holding the rest. Still think that, the thesis is intact there. Bitcoin miner is doing well. I own a bunch of iron now. This just seems too good. I think we go make an all-time high in there. As long as the bull market stays on, I think this goes to all-time highs pretty soon. Hyperliquid has obviously been doing something special. This is a fractal with Solana from the bottom of the 2022 market, or 2023. That's pretty hopeful, but we'll see. Zcash was about to make a new high. Honestly, it hasn't reacted that well, so we're gonna have to see this play higher. I don't love this formation up here, but just kind of holding that trade for now. Bitcoin volatility in general is just at its lowest. Like I want to see it break to the upside here, express some volatility, because there's a lot of stored up energy in there. MSTR retired some debt this weekend, which I really like. It's going to improve their credit rating. You're seeing all of the meme stocks are starting to bid again too. So something to watch out for. Risk is on. Risk is absolutely on. And I'm starting to do a little more due diligence into just, medical stuff. But for now, staying away from that. That's pretty much it. It's hard to not just say we're still in the uptrend here. I think you got to be really careful. And I don't know if Bitcoin's signaling anything that it won't go, or if people are just so over it. But we'll see. We'll see how this plays out. At some point, this is going to cross over this 200-day. We're going to break out of this range, and it's going to be on like Donkey Kong. But not for now. And if we break this range and head lower, it's going to be bad news bears. All right. Yeah, looks good. Looks good. Tune into the streams later. We've been doing a lot of work in there and really been enjoying that. So that's about it. Let me know what you guys think of this setup. Still kind of working on it, but I like it for now. Talk to you later.